Hey, it's Randy from Funeral Funds of America. In this video, I'm going to share with you the actual pricing for $25,000 worth of burial, cremation, final expense, life insurance, or funeral funds for a 74-year-old male. Now, first thing I recommend is go directly to our website at funeralfunds.com. And on just about every page on our website, we have these free quoters. And all you need to do is select the state that you live in. We are licensed in all 50 states, by the way. Select the coverage amount, put your birthday in here, fill out the rest of the info, click Get Quotes Now. It will take you to a page that's going to show you the best insurance companies with the lowest prices based off your age, gender, and the state that you live in. And from there, you'll be able to compare all the different companies, and it will really help you in your shopping process. You can also call us at 888-862-9456, and one of our agents can run you through what you qualify for and what your actual pricing would be as well. Now, one thing we always recommend to every 74-year-old male looking for $25,000 of insurance is just to determine if that $25,000 is going to be appropriate for their final expense needs. Now, for final expense, we would typically be talking about cremation or burial. So let's talk about them in that order. Now, cremation, there's two options. The first option is you get cremated and you come home in a cardboard box or an urn. That's typically going to cost between $1,000 and $2,000. The second option is going to be if you get cremated and there's also some sort of ceremony, a remembrance of life or celebration of life ceremony, something like that. Now, as far as coverage amounts, let's go back to option one where you come home in a cardboard box or an urn. We would typically recommend around $5,000 to $7,000. That's what we help most people with anyway. But you might be saying, well, Randy, hold on, because you'd said $2,000 is going to be the cost of the cremation, but you're recommending $5,000 worth of insurance. What's the deal there? Well, the deal is, our 74-year-old male probably wants to make it to age 84, even older perhaps. And we know that pricing will go up over time. We know that prices on everything go up over time due to inflation. So all we're doing is we are just getting a little bit more coverage than we need right now. We're locking in our lowest rates right now at our youngest age. And what that extra coverage will do will inflation-proof the plan in the coming years so that you don't have to worry about that coverage, or actually so that your family members and loved ones don't have to worry about the coverage, and it'll pay for everything. What also happens is you end up being just slightly overinsured in the early part. And that way, if you did die in the next few years, there's some extra money left over to pay for some other expenses, like maybe credit card debt or medical expenses or something like that, that if you had the gift of time and you lived longer, you would have paid that off, but you didn't, you died early. So there's some money to help take care of that. So it's nice. You actually kind of inflation proof in the long term and you kind of expense proof in the short term. Now, for that cremation where there's a ceremony, most of the time we're helping people with probably between $7,000 to $10,000. And, again, we're inflation proofing the plan long term and expense protecting in the front end, just providing some extra coverage. And that works out terrific for just about everybody. Now, for a burial, the actual cost of a burial in the United States is right around $10,000. So if you walk into pretty much any funeral home in the United States and you have a $10,000 check, they'll help you get things done. If they don't, you just walk out the door and walk 2 blocks down the road to their competitors, and the chances are they're going to help you out. But just understand that $10,000 is kind of the bare bones, and it's going to be a very simple type of funeral, and it's not going to be inflation proofed at all. So, but if you're on a fixed or limited income and that's all you can afford, get that $10,000 because that takes care of your most immediate needs. So it's critical. It's so important to have that first bit of coverage, but then be aware we can always help you add more coverage later, which works really terrific. But for most people, most 74-year-old males, we're probably looking at $10,000, $15,000, or $20,000. Probably not so much $25,000 on average, unless your body had to be transported to another state or something like that. But just keep in mind, we can help you understand what's going to be appropriate, and the more money you get, the more inflation-proof your plan will be. But there gets to be a point where you don't need any more coverage. So sometimes somebody will call us up and say, hey, I want to get my final expenses taken care of, burial, cremation, whatever it is, but I also want to leave some money behind for my kids. And they'll say, well, what's like 30, 40, or 50,000 or something like that? So let's say it's 50,000. We run the rates for them, and it's just like, they go, oh man, that's a little much. I'm on I'm on Social Security or disability. I just can't really do that. So I guess I'm not going to do anything at all. And we want to let them know that the reason it's expensive is their fault. It's not the insurance company's fault. They waited until age 74, and it does get more expensive the longer you wait. And also, we talk with them and say, hey, you came here and your initial goal was to take care of your final expenses because we know you're going to die someday. There's no way getting out of that. But then you would like to, if possible, get some money to give the kids, insurance. So what we typically recommend they do is let's get the final expense taken care of first, because we do know you're going to die someday. They are going to need that money. If you don't have the insurance in place, they're going to have to pay that out of their own pocket. Typically, they're going to have to pay that with a credit card. 26% interest, they're probably going to be paying on that years and years and years. And that's just a terrible burden for them. So we recommend take care of the final expense first. That should be very affordable. And then at some point in the future, if you want to add more coverage later and give the kids some money, extra money, we can just write a separate policy for that. It works so terrific for folks. If money's not an issue, of course, we can take care of it all at one time. But again, most of the people we help are on a fixed or limited income. Now, one thing we always recommend is getting first day coverage or benefits. We do not recommend the 2-year waiting period plans. And we'll go over that in just a moment. But what first day coverage means is hypothetically, if your plan were issued and approved today and you died tomorrow, the insurance company would have to write that check for $25,000 or $10,000 or $15,000 or $20,000, whatever it is. It's going to be the best coverage at the lowest pricing. Now, some people say, well, you're right, Randy. I do like that first day coverage, but I hear they ask health questions and I'm not in the best of health. And I'm a little worried about that. And we say, well, that's our concern, not your concern, right? At least from an insurance standpoint. What we mean by that is we work with so many different insurance companies. They all have different health questions. They all have different underwriting requirements. And right now we're getting about 90 to 95% approval on first day coverage or benefits. So we're really terrific at what we do. Really, the only reason we couldn't get you first day coverage is if you waited too long and you had some real health problems, like maybe you had a terminal illness and you're going to pass away in the next 12 months, or you had dementia, or you're on dialysis, or you're in a hospital or in a nursing home. If that were the case, we'd typically refer you out to a different insurance company. And one thing that always also happens seemingly on a weekly basis, I guess, is we'll have somebody call up and they'll say, hey, we just had a family member pass away this last week. They didn't have insurance. We don't have any money. And now their body's at the funeral home, and the funeral home director not going to do anything till he gets a check in his hand. So we need to get this insurance really quick so we can get that money to get to the funeral home director. And we have to let them know that there's no insurance company that's going to offer an insurance policy on a dead person, somebody who's already died. No, you have to be alive to qualify for this insurance. And it's really sad that their family member passed away, of course, but it's doubly sad that they didn't care enough about their family to take care of this in advance, and now their family's socked with this debt, and they're probably going to have to put it on credit cards, paying 26% interest, and it's going to take them years to pay off. And it's like, what a terrible legacy to leave behind that you didn't take care of this in advance, right? You knew you were going to die. You probably looked at this insurance before. They probably did, and they just put it off, and then one day they just went and died, and now it goes on other people's credit cards, takes years to pay off. What a terrible legacy to leave behind. Don't do that to the people that you care about the most. You could have done everything else right in life, and you finish off with this. So just don't burden other people with a responsibility and financial burden that's not theirs to bear. Just take care of this. We can always help you out. If you need to start out smaller, we can always add more coverage later. Now, one thing we don't recommend is those plans with 2-year waiting periods. And Colonial Penn has a plan that's got a 2-year waiting period. You probably recognize Colonial Penn. They advertise on the TV all the time. Seems like their $9.95 plans are on TV every 7 minutes. But yeah, that $9.95 plan is a 2-year waiting period. Yikes. Yeah, not good stuff, right? You should never buy a 2-year waiting period plan if you qualify for first day coverage. You'll just end up overpaying. Oh my gosh. So there's other companies out there that offer 2-year waiting periods, like Mutual of Omaha, their United of Omaha line, AIG, Gerber, so many other different companies. But some of these companies have done an amazing job of convincing the American public that if you're over the age of 50, the only thing you're going to qualify for is a plan with a 2-year waiting period, to which we always say, don't fall for such nonsense, because we help people with first day coverage all day long. So, yeah, well, our 74-year-old male here, he probably just got done watching a Colonial Penn TV commercial and probably thinking he's pretty kind of outsmarted Colonial Penn. He's probably like, hey, I waited till age 74. Now I'm going to get me some 995 insurance. I'm probably going to get 20,000, 30,000, 40,000, maybe even $50,000. And then our 74-year-old calls Colonial Penn, talks with an agent, or gets on their website like we are for you right now, and sees that a male age 74, 1 unit of coverage for $995. Again, $995 is only going to buy $578 worth of coverage. Let me tell you this, $578 is not even enough to buy a cremation in any part of the country we know, and it doesn't really matter because you know why? Because it's got a 2-year waiting period. It's not going to pay out any death benefit if you die in the first 2 years from any health or medical related cause of death. So why would you ever get a plan that's so woefully inadequate just because you got a cheap rate, right? It makes no sense. Now, there's some people out there that would say that, companies that offer these low teaser rates, these rates that are kind of designed to get your information. And once they got your info, they'll put you in their marketing funnel and boy, then they'll hound you. But, then once you get on the phone with them, they will gladly show you that teaser rate for how minimal coverage is. And some people would say they don't even want you to buy that plan, right? What their real intent is to get you on the phone and then upsell you into more coverage that's more profitable for them. Now, we would never say Colonial Penn would ever do anything like that, but there's some people out there that seem fairly convinced of that. And I guess you can form your own opinion based off the fact that you're only going to get $578 for $9.95. But let's do this. We want to get $25,000. The challenge with Colonial Penn is they only go up to 15 units. So it's going to max out at $8,670 for a 74-year-old male. That's going to cost you $150. So let's see what first day coverage would be. I mean, for $25,000, I know it's going to be kind of on the high end because you're age 74. You waited. You're the one that waited until age 74, and you're the one that wants like $25,000 worth of coverage when you probably only need 10 or 15. But let's run the numbers. 25,000 male. Age 74. Here we go. Get quote. Let's watch this one. There we go. That's going to be $219. This is level coverage, which means first day coverage. So I'm not sure that we would really recommend this for people. For most of the people we help, that's going to be pretty out of their price range. But if you look at it, you're getting $25,000 for roughly $220, and this is $150. You're only getting $8,600 basically. So what we typically see is dollar for dollar. Colonial Penn is typically going to be right around 200% more than first day coverage. We could show you that if they actually went up to 25,000, but they don't. You're going to max out at 86. So just keep that in mind. Let's look at some other companies. We're about 220 there. You'll be able to see all these different insurance companies here. But here's one, 220. Here's 256. So around $36 more a month. It is level coverage though, but let's do the math on that. $36 a month times 12 months is going to be roughly $432 a year more. And if our 74-year-old male lives to age 84, you will have overpaid right around $4,320 more by going with this insurance company versus the lowest price insurance company. And let me ask you this. If you were walking on the sidewalk and you had your wallet and it was full of cash, like full of $4,300, and would you ever just pull that out and throw it on the sidewalk and keep walking and let people pick up that money and keep it? No, you wouldn't, of course. That's kind of essentially what you're doing when you overpay for insurance. You're just giving your money away to another insurance company with no benefit, no extra coverage. It's the same amount of coverage as our plan that's here. That's cost so much less, right? But yeah, don't do that. That money's better off staying in your bank account than putting into the bank account of an insurance company. Let's look at one more. Oh, here we go. Lincoln Heritage. Fine company, I guess, but holy cow, look at that pricing. $291. This is level coverage. Again, let's go back and look at this, right? $291. We can get this for basically $220. So yeah, $291. So you're paying $71 more, roughly $70. But why is it so expensive? Well, the reason it's so expensive is they've got a deal where when you pass away, they would supposedly call 2 or 3 different insurance companies to get the lowest price, and they'll do supposedly a few other things, but they charge for that. It's not free, right? Oh my gosh, but yeah, like $70 more a month. So let's do that. $70 a month times 12 months. That's roughly $840 more a year to go with Lincoln Heritage. And if our 74-year-old male makes it to age 84, you have ended up overpaying right around $8,400 more, roughly. So you got to ask yourself, is it worth overpaying an extra $8,400 just for them to call 2 or 3 funeral homes and maybe do a couple of other things that may only take an hour or so to do? Whew. Some people would say that's a great payday for an insurance company. Whew, on an hourly rate, that's impressive. We never recommend you giving like $8,400 roughly more to an insurance company than you should. Boy, holy cow. Just let us help you get the lower pricing. Save that money. Keep that in your bank account. Spend it on yourself, your family. Create memories for yourself. Don't give that money to an insurance company. And that what we recommend is we've got a free funeral and estate planning guide on our website. You can download that. You can print it out. Once you print it out, just fill it out. Write down who gets what goes where, and what you want done after you're gone. And then keep it with your insurance policy. And that way, when you pass away, your family members go to that one place and they're going to know that they're protected financially with the insurance policy, but they're protected emotionally with the funeral and estate planning guide. And all you'll need to do is open that funeral and estate planning guide, read it, and just execute your wishes, what you wrote down. And, not only that, it'll make it so easy for them because they won't have to make any decisions, and they know that the money's there to protect them. And they'll know that you not only loved and protected them in life, but you loved and protected them that one last time in death, exactly when they would need you the most, but you weren't there, but you took care of this in advance. What a wonderful legacy to leave behind. If you want to leave a legacy like that behind, just reach out to us at Funeral Funds of America. We've got a special quarter at funeralfunds.com/YouTube for our YouTube visitors. You get the best companies, the best rates, the most discounts, and you'll be able to see all the different insurance companies to see what you can possibly qualify for. We then give us a call at 888-862-9456. We can help you out with that. We can help you understand your options. But, if you've got an existing policy and you want to see if we can save you money, or you just want to add coverage to it, we can help you out with that. If you are looking at brand new coverage, or you just want some information, or you have some questions, we can help you out with that. But we look forward to that day when we can help you get the most amount of coverage for the least amount of money. We will be blessed to help you with this at some point in the future. Until that day comes, you stay safe, you take care. You have a nice day. Bye-bye.